Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, including news of oil and gold at centre stage. Firstly, however, in the US, the talk is of a softer Thanksgiving retail sales, but actually that is a bricks and mortar result. The continuing shift online is bolstering overall spending and shifting it later. China has announced it will start a state-backed insurance system for bank deposits, a move towards scrapping remaining controls on interest rates and allowing lenders to fail in a more market-driven economy. In Switzerland, voters have rejected going back on the gold standard. The vote there was a clear 40-60 rejection of the initiative. The result will take even more off the gold price when it opens, although markets anticipated the vote and the price of the yellow metal fell $30 on Friday, London time. In Australia, the recent slide in the iron ore price has prompted ANZ to cut its economic growth forecast for the lucky country by 0.25% to 2.9% in 2015, but the bank is still expecting the RBA to begin lifting rates next year. That compares to their 3% forecast for New Zealand next year. US Treasury 10-year bond yields are keeping on falling and ended last week in New York at just 2.17%, its lowest level in more than 17 months. The same thing is happening here last week with falls in our wholesale swap rates, and they flattened at the same time. Given the New York benchmark moves, I expect the local downward trend will continue. In fact, we are seeing the main banks drifting their mortgage rates down, and term deposit customers will start to be getting uneasy at these levels. Meanwhile, the oil price seems to be in free fall. The US West Texas Intermediate price is now below $66 a barrel, and the Brent price is just on $70 a barrel. The combination of too much supply and levelling demand in Europe and China seems to be the spur for the decline. Low oil prices will drive inflation data lower, but on the flip side it means we are not spending as much on this energy source, leaving cash available for other purchases. In New Zealand, we see the oil retailers keeping as much as 10 cents a litre more margin than they usually do as prices fall at the pump. When the latest crude prices show up in New Zealand pricing, petrol will be below $2 a litre, probably more like $1.90 if the retailer margins revert to normal. That is a lot of extra spending power in the New Zealand economy. We've calculated that since the $2.20 a litre price, that basically applied all year up until October, a minimum 20-cent reduction in pump prices is equivalent to $50 million per month in customer savings. $35 million of that accrues to households and about $15 million accrues to businesses. Diesel savings are on top of that. At an annual rate of about $600 million windfall, these lower petrol prices and the resulting lower CPI won't be all that bad. In fact, the pump price savings will likely end up being more than 20 cents a litre. The gold price has also taken a big drop and is now just on $1,167 an ounce. The US dollar is the main beneficiary of all this. The New Zealand dollar starts the week marginally lower at 78.3 US cents, 92.4 Aussie cents, a 4-month high, and the TWR is at 78.5. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.